Welcome to the 29th installment in Trading Strategy Guide's Trading Education series. Today we're going to talk about trend analysis. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back to this installment of our Trading Education series. Today we're going to talk about another element of technical analysis, and that would be trend analysis. Be sure you stay until the end of the video and I'll show you the dream trade for this week. Finding the dominant trend in the market is a very important topic that is often overlooked and can make a huge difference in your trading. There are a few ways that you can identify the market direction. Which one you feel more comfortable with is up to you. I'm going to show you the one that I prefer. And that one is analyzing the highs and lows of the market to establish the market trends. It's quite simple and effective. Let's start with one of my favorite subjects, trading psychology. Psychology pretty well explains why the market moves the way it does. A trend consists of two things, sentiment and momentum. Sentiment is when a significant percentage of the market participants are thinking the same way and they start acting on those thoughts by buying or selling. That action then powers the momentum or market movement, and we have the beginning of a trend. So the result, bullish or bearish sentiment turns into bullish or bearish momentum. If the momentum continues, or we have a large percentage of traders acting on that particular sentiment, then we have a trend continuation. A strong trend can overcome support and resistance levels and can also overcome market fundamentals until it just finally tires out. What causes it to tire out? Well, the early adopters of the trend have enough money and are thinking that this move just can't continue, so they begin closing out their positions. This can cause later adopters to think that the trend is slowing down and to also close out their positions. Eventually, what we have is a drawback in the trend. This is the point at which some of the early traders will jump back in, causing the trend to continue. You'll hear me say this a lot, and that is the result of this is market breathing in and out. Okay, let's talk a minute about how to determine the trend direction. How do you determine what the dominant psychological trend of your chosen market is? First, no matter what type of trader, you need to start analyzing the charts on the most relevant time frames. And in my opinion, the most psychologically relevant time frame is the daily chart. So depending on what trend you spot on the daily chart, this gives you valuable insights into whether or not a buy or sell trade is a trend following trade or a counter trend trade. It's very important to go with the flow as often as you can. You don't want to put yourself in a position where you're swimming upstream. And what I mean by this is that you don't want to be long in a bearish trend and short in a bullish trend. There is a caveat here. There are many traders who consider themselves counter trend traders. In other words, they purposely trade reversals against the trend. They'll take their profit during the breaths in the market. If you're a new trader, I highly recommend that you leave counter trend trading to the more experienced traders. You'll find trading with the trend to be easier and far less stressful. The first thing you need to do to identify the market trend is to find swing highs and swing lows on the price chart. The swing high or low should be smooth because the smoothness of a swing high or low is very reflective of the organization of the price action, and subsequently it can indicate the strength of the trend. Since the price never moves in a straight line, there will always be ups and downs and market breaths, as I mentioned, and that's the reason why swing high and swing low price structures are essentially the building blocks of any trend. Secondly, you have to mark them on the price chart so they'll be easy to see at a glance. This exercise will help you in the beginning to better read the market trends. After a while, they will just jump right out at you. A swing high is simply represented by the peak reached by an asset's price. You must see a reaction lower from these price points. The more significant the reaction from these levels, the better. From a visual point of view, a swing high usually takes the form of an inverse V or an inverse U. And here's the example. This is a swing high, an inverse V, another swing high, another swing high, another swing high, and another swing high. A swing low is simply represented by the troughs reached by an asset's price. You must see a reaction higher from these price points. The more significant the reaction from these levels, the better. From a visual point of view, a swing low usually takes the form of a V or a U. This swing low in the shape of a V, and this one, and this one. Now that you know what to look for, let's define an uptrend and a downtrend using the swing highs and lows approach. An uptrend is a series of higher highs and higher lows. In an uptrend, for the most part, the price needs to be dominated by green bullish candles, which are reflective of the bullish sentiment and momentum. Just so you understand, that doesn't mean the uptrend ends when there are a few red candles. The swing wave needs to have a good angle to maintain the bullish momentum. Of course, we don't talk specifically about angles because the exact angle is determined by how dense the candles are on your chart. So you're looking for a series of higher highs, higher, 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 and higher lows. This is higher, 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 and so on. This defines an uptrend. Now what about a downtrend? Well, a downtrend is just the opposite. It's a series of lower lows and lower highs. In a downtrend, again, for the most part, the price needs to be dominated by red bearish candles, which are reflective of the bearish sentiment and momentum. As before, a few green candles doesn't mean the downtrend has ended. The swing wave needs to have a good angle to maintain the bearish momentum, but once again, the actual angle will be reflected by the density of the candles on your chart. So the downtrend consists of lower lows, lower, 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 and so on, and lower highs, lower, 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 and so on. And that's the definition of a downtrend. So how do we go about identifying a shift in the trend direction? First, we need to define what an intact trend is. An intact trend essentially means, in the context of a bullish trend at least, that we're looking at previous higher highs and higher lows acting as dynamic support. As long as the trend remains intact, the supply and demand balance remains skewed to the upside. And that's just a fancy way of saying we still have an uptrend. We're making higher highs. We're also making higher lows. As long as we continue making a higher low, the trend is intact. As soon as we make a lower low, by definition, that would be a reversal or a shift in the trend direction. When the price is moving, we have to ask ourselves if the previous higher high or the previous higher low acts as a safety net catching the price action and keeping it within the higher high, higher low price structure. Once the previous higher low is invalidated, like it is right here, and you're able to identify a lower high, lower low price structure, there is a potential shift in the market trend and a possible reversal. And of course, you can apply the same rules in reverse to identify a trend reversal from a bearish trend into a bullish trend. With experience, you'll discover that identifying the trend direction is pretty straightforward. You just want to ask the following questions. Number one, is it making higher highs and higher lows? If the answer is yes, then it's in an uptrend. Number two, is it making lower highs and lower lows? If yes, then it's a downtrend. And number three, is it doing neither? If the answer to that is yes, then it's going sideways. If you're having trouble identifying the trend on your selected time frame, try going up one time frame and see if it's more clear. And that covers trend analysis this week. Next week, we'll continue talking about technical analysis when we dive into identifying future trends. For now, let's take a quick look at the Dream Trades. Dream Trades is a service from Trading Strategy Guides. Just a quick overview, the Dream Trades app shows you selected stock issues that meet the Dream Trades criteria. The stocks are selected by their trade volume and other fundamentals, and also by the price with respect to the 50, 150, and 200-day simple moving averages. The trade suggestions are divided between bullish and bearish signals. Now these are the trades that we've been tracking. I moved the stop up to 47.91 on ACA or Arcosa Inc. And last Thursday the price dropped down and hit our stop. Done with ACA, but we made a 5% profit, so not too shabby. B2 Gold or BTG continued sideways, so I shut this trade down just before the market closed on Friday at $6.75 for a 2.7% loss. Looks like it's coming back up, but I'm done with this one for now. Lumentum Holdings or LITE is also continuing to go sideways, but it keeps giving us higher highs up here, so I'm still in this. Camping World Holdings or CWH, I talked about shutting this one down, but I didn't do it before it dropped like a rock on Wednesday and stopped me out, so I took the whole 10% loss on this one. Well, life goes on. Last week's Dream Trade was Garmin Limited or GRMN. It gave us this buy signal on Friday with a nice volume spike right here. So I bought it. My stop loss is 90.75. My first target is 105.87. As I've mentioned before, I'm recording this video on Tuesday afternoon after market close. And I'm really liking the look of this BDC or Belden Inc., which pulled up above the moving averages and now is attacking the 50 right here. It did not close below the 50 today. So what we're looking for is a candle close below the 50 to sell BDC. The stop loss will be 1.1 times the entry price, and the first target will be 0.95 times the entry price. Taking the Dream Trades is simple but requires just a bit of analysis. So just about 30 minutes before the market closes, or about 3:30 p.m. New York time, take a look at the charts for all the calls in the Dream Trades app and find the ones that have been trending in the correct direction. Also, it's nice to see a spike in the volume on the breaking candle. For a sell, look for a candle close below the 50 SMA. Your stop loss will be 1.1 times the entry price, and your first target will be 0.95 times the entry price. If the price starts going sideways, we'll close it and move on, which will allow us to use the equity on something that's moving. When the price hits our first target, we'll move our stop loss up to break even. Each time the stock moves 5% in our direction, we'll move our stop loss an additional 5%, so it will always be 5% behind the current price. And that's our Dream Trade for this week. If you want more information about Dream Trades, just click the link below in the description box. Come back Friday for my strategy of the week and next Monday for my trade pick of the week. And don't miss the next installment of the Trading Education series next Wednesday when we'll discuss identifying future trends. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great hump day, and I'll see you on Friday.